Is China collapsing? One of the biggest manufacturers, leading technology innovator, and world's second largest economy is on the brink of collapse. China's economy is slowing down, and there are concerns that it could soon collapse. China has been the leading economic power for many years now, but this growth is starting to slow down. For example, in 2019, GDP growth was down to just 6%. Some experts believe that this slowdown is a sign of things to come. You might be thinking that surely a country who leads the economy for many years and known for its strength and culture cannot crash. However, in this video, we will discuss why China will likely collapse in the future. If you like more of this content, feel free to like, share, and click the subscribe button. Reason number 1, one-child policy. In an attempt to regulate its growing number of citizens, we can remember that China implemented a one-child policy limiting the number of births and giving incentives to families that complied. What they did not expect is that this policy will soon be one of the reasons for their doom. The decreasing number of births in China has been alarming as it's lower than Japan's, and their predicted population by 2100 is less than 600 million. So, what does this tell us? Why is this relevant? This tells us that in the coming years, China's workforce has become lesser as well as its consumers. With the shrinking of the consumer market, how will companies in a country be profitable? It can't. Also, with a young population and low birth rates, how can the economy sustain itself in the last 30 years? It can't. The economic bubble will burst. The economy of China is driven by its growing consumer base and an increase in the labor force. This leads us to the next reason. Reason number 2, China's real estate crisis. Although censored by the CCP, there have been posts about protests and social unrest in the country fueled by the sudden stop of construction of 301 projects in 91 cities, which led to a mortgage boycott in China. These homeowners who are now having doubts about whether the projects will be finished are refusing to make mortgage payments totaling up to $300 billion. This made a great impact on China's economy as its citizens heavily rely on real estate business, and property prices have fallen by more than 20% in dozens of locations this year, which may be due to decreasing population and pandemic. This is not only the reason why Chinese are holding on to their money. Another reason is the recent freeze in China's banks. Recently, over 400,000 Chinese citizens saw their bank deposits freeze. Depositors were simply denied of transactions when they attempted to withdraw cash from an ATM. People panicked as they were unable to even withdraw their own money. A vast fraudulent scam that went on for more than 10 years is believed to lead the bank freeze. Despite repeated attempts by the CCP to control them, protests against the bank freeze have gained widespread attention on Chinese social media sites. Although the bank freeze only affected 5 specific banks, the Chinese government claims that hundreds more Chinese banks are in danger. Following the bank demonstrations' viral success, societal unrest was felt practically everywhere in the nation. With the mortgage boycott and the bank freeze, we can see that the domino effect is bound to happen. After the failure of these 5 banks, the failure of another 20, then another 100, and finally the failure of the entire financial system will be inevitable. This is because, like the financial infrastructure of nearly every other country, China's banking system operates with only a fraction of the funds it actually has on hand, utilizing the monetary multiplier effect. For instance, $1,000 is deposited to the bank. There is no way for a bank to keep the $1,000 that a consumer deposits. Instead, it will keep the $100 in reserves. Then, it will loan out $900 and collect interests on the difference. The money lender will use the $900 to buy goods and services. Someone else will earn $900, put it in the bank, and then spend it. The bank then will hold $90 as reserves and loan out $810. The lender will use those $810 for expenditures. Somebody will get $810 in wages and put it in the bank. To put it another way, the bank will lend $729 and maintain $81 in reserves as a result of this transaction. Every time this loop occurs, the bank's leverage increases by 10. In this example, the monetary base we examined was initially $1,000 but grew to $10,000. The multiplier effect alone made $9,000 appear out of thin air. That is why, when everyone tries to withdraw their money, they will be in pieces as they cannot do it, as their money is not with a bank and is used to create more money. But you may be wondering, why does Chinese people pay mortgages for houses that are not even built? We can link that to the Chinese behavior of buying houses first because in the past years, the housing process continued to skyrocket, making them eager to purchase one as soon as they can. This demand led the developers to build as much as possible. Here, the pre-sale approach proved useful. In the pre-sale model, purchasers put down money and start paying mortgages on unfinished homes. You heard it right. People were taking out mortgages on unfinished buildings. Pre-sale home purchases made a lot of sense during the height of the housing bubble, even though any sane person would know better. Many would-be homeowners predicted that house costs would keep rising. They feared that the value of the property would increase significantly by the time construction was completed. Also, those looking to buy a home at a discount would be willing to take on more risk by purchasing the pre-sale round. The Chinese National Bureau of Statistics reports that pre-sales account for 34.5% of property development income. However, this was not enough to finish the whole project. That is why another round of pre-sale in another area will be conducted, allowing the budget for the previous project to come in. This would have worked if the Chinese people continued to pay their mortgages religiously as they have in the previous decades, but the developers' failure to provide a clear date as to when the houses will be turned over, the people began to be suspicious and wrote a plea with the help of the local government. However, the developers failed to listen, which led to massive protests resulting in the mortgage boycott. But China's inner turmoil is not the only reason for its impending collapse. Its foreign relations also made economists think on how will they survive, leading us to the next reason. Reason number 3, the ongoing trade war. In 2018, the trade war between the US and China started. Since then, both sides have been trading tariffs. This has increased the cost of doing business in China for many companies, which has led to slower growth. If this trend continues, it could have serious consequences for the global economy. It could also mean that investors will lose a lot of money. There has been a lot of talk about a possible recession in the US as well, although most economists believe that there is still plenty of growth in the offing. However, the rising tension between the US and China could lead to a global economic slowdown that could last for many years. If that happens, there will be implications for many countries around the world, including Australia. Economists around the world are concerned about the future of the Chinese economy and the consequences for the rest of the world. Will China be able to recover from its crisis, or will we watch the world's second largest economy collapse? Tell us what you think in the comment section. If you enjoyed this video, please see our other videos and hit the subscribe button. See you in the next video.